game without knowing the rules. Hello, my dearest friends. Svetlana Shlapak, the founder of UKVisaSuccess.com is here. Can you really win the game without knowing the rules? You can't, and that is precisely my point. Unless you are at the same page with the decision maker who is reaching a decision on your visa application, your chances for success are very vague. And that is precisely why I've created this Know the Rules to Win the Game video series where I'll be deconstructing all major UK immigration categories. There will be overview videos giving you all major rules about relevant categories so that you can see exactly what the decision makers look at when they consider your applications. And if after watching this video you want some more information, please do check my website and also the description area of this video. There I'll be giving you information regarding the next free webinar which I host in order to help you understand various aspects of UK immigration law. Please help me help others by liking, sharing this video and subscribing to my channel. For those of you who already done this, thank you so much for your continued support. I really appreciate this. So let us deconstruct the next immigration category. Okay, we have Bill and Emily. Bill is a British citizen. He lives in the UK and he is in a non-salaried employment in the UK. He works on a weekly rota basis and does not receive any paid holidays. He has earned £450 each week in the same job for the last 7 calendar months, except for the week prior to the date of the application where he earned £150 owing to a holiday. Let me first of all show you how they calculate non-salaried employment. So they take gross earnings from employment held throughout the last 6 months just before the application. Then they divide it by 6 and multiply it by 12 months. So, and what we have here, we know that there are 26 weeks in 7 months, and we know that one of these weeks he was earning only £150. So we take 25 weeks multiplied by £450, and then we add 1 week at the rate of £150. Then we take the whole amount and divide it by 6 months, and then we multiply it by 12 months. And what we have here is £11,400 divided by 6 and multiplied by 12, and we know that the couple in this example was earning £22,800, which means that our couple easily meets the minimum income requirement. We have Alex and Samira. Alex is a British citizen. He lives in the UK and he's a fashion photographer who does short-term contracts work for several agencies. He has periods without work and the amount he's paid varies from job to job. Over the last 12 months, he has earned a total of £20,000 and in the most recent 6 months, his gross earnings were as follows. The application is made on the basis of meeting the financial requirements under category B. As you know, this is a twofold test here. We need to prove the partner's earning over the last 6 months. It has to be in excess of 18,600 and in excess of 18,600 over the last 12 months as well. So under part 1 of this test of category B, we have to prove Alex's current annual employment income, which is calculated in accordance with the following formula. We take gross earnings over the last 6 months and then we divide it by 6 months and multiply it by 12 months. So what we have here is £3,500 plus 0 plus 0, then plus 2,300 plus 3,400 plus 500 and the entire amount divided by 6 months and then multiplied by 12 months. So we know that over the last 6 months he earned 9,700, and then we divided by 6 months and multiplied by 12 months. So and the annual figure for the in accordance with the last 6 months earnings was 19,400 pounds. So the first part of the test is satisfied. So over the last 6 months we can say that he safely earned in excess of 18,600 pounds. Now we have to take a look at his earnings over the last 12 months. So what we do here, we take the actual earnings, which was, as we know from the circumstances of Alex's particular case, it was in excess of 20,000 pounds. So in this particular case, we have both parts of the test, part one and part two, satisfied, and therefore we can say that a couple meets the minimum income requirement. We have another couple here, John and Gwen. Gwen is in receipt of tax-free academic stipend of 12,000 a year, and also her post-taxing employment income is 4,500 a year. Her combined net income is 16,500 pounds, which is 12,000 plus 4,500, and there are no sponsored children involved in this application. The question is, do they meet the requirement? I draw your attention to the fact that the amount which she's getting 16,500 is a net amount, not the gross amount. And according to the minimum income requirement, 18,600 is a gross amount. So here is the table in front of you, which converts net income to gross one. And as you can see, our couple is clearly within these boundaries, and therefore we can say that this couple safely meets the necessary requirements. Here we have Tony and Fiafania. Fiafania has an investment portfolio worth approximately £1 million, although this value fluctuates. In order to meet the financial requirement, she liquidates part of her investment 2 months prior to the date of application and transfers 62,500 in cash to her personal savings account. She is able to provide a portfolio report showing that the value of the liquidated assets was at least 62,500 pounds 7 months prior to the date of application. The cash savings meet the requirement of Appendix FM, the minimum income requirement at the date of the application, and by combining the period the money was held as investment with the period the money has been held as cash savings, the funds have been owned by for Fiafania and under her control for the last 6 months at the date of the application, and therefore the financial requirements met through category D cash savings. And just to analyze this further, let's suppose Fiafania didn't have any investments in she didn't have a portfolio, but she owned two properties. One is in the UK and one is overseas. The parties own both properties, and which were residential homes for over the last 10 years. They sell the overseas property prior to returning to the UK. The property is sold 3 months prior to the date of the application, and Fiafania has provided evidence showing that net profits from the sale amount to 70,500 after payment of professional fees and taxes. Fiafania has provided a solicitor's letter confirming ownership and the sale of the property, and a further letter from the solicitor showing the financial transactions and that all outstanding fees were paid. She has also provided a letter from the mortgage lender showing that the original purchase price and the outstanding mortgage at the time of sale, and that it has been paid together with bank statements to show the transfer of profits into the couple's joint account. The cash savings now held at the date of the application meet the requirements of Appendix FM, the minimum income requirement, because taking account of the periods they were held as a property, and the funds have been held by Fiafania and under their control for the last 6 months prior to the date of the application. In addition, all the evidence which are necessary were provided, and therefore we can also say here that the couple meets the financial requirement through category D cash savings. We have Esther and Jerry. Jerry is a British citizen. He lives in the UK and he's in receipt of state pension, which is £122 30 pence per week. He also gets his private pension, which is £160 per week. Esther, a visa national, she receives her state pension in her country's currency, which is an equivalent of £227 81 pence per week. The question is, will this couple meet the minimum income requirement? And let us calculate this. So, what we need to do, we need to, because all the amounts which I've just mentioned, they are all in weekly figures. So, we have to multiply them by 52 and what we get here. So, the £122 30 pence per week is £6,359 60 pence per year, and then the private pension is £8,320 per year, and Esther's income is an equivalent of £11,846 12 pence, and the couple's total income is £26,522 72 pence, and they're way over the minimum income requirements, and therefore they clearly meet the requirement. We have Nick and Gerta. Nick is a British citizen. He lives in the UK and he is self-employed person. And in the last financial year, his income was 20,000 and mm, o- £116. The question is, will the couple meet the minimum income requirement? And the answer is yes, provided they do not have any visa national children, because in this case, their minimum income requirement will be raised. But if they don't have any dependent children, visa national dependent children, then the answer is yes, they will meet the requirement. So if we take Nick and Gerta from previous example, and Gerta tells us that she also has a daughter from previous marriage. She is 14 years old and she's a visa national. Will the couple be able to meet the requirements? No, if we because if we have a dependent child, then the minimum income requirement for the first child raises up to so we need to add £3,800, so which will leave us with the minimum income requirement of £22,400. And we know that Nick earned less than that, unless if making further inquiries we find out that he earned more in the previous financial year. So what we need to do, and he tells us that he earned £32,000, so we need to add £32,000 to £20,116, which was leave us with this amount, and then we have to divide it by 2, and then the average annual income would be £26,000 58 pounds, which is above the minimum income requirement. In this case, Nick and Gata will be able to meet the requirement if we take full 2 financial years as self-employed.